morning, Mark Soderberg with ADM Investor Services with your morning ag update. Prices are higher across the ag space overnight. Primary reason for the recovery is news that after only 2 days, Argentina has reinstated their export taxes on agricultural products as they have already reached their goal of generating $7 billion in export revenue. Corn right now is 3 cents higher. Soybeans, they are about 4 to 7 better. And the wheat also running 4 to 6 higher. In the products, soybean meal, that's $1 to $2 higher, while soybean oil, that is up 25 to 35 points. During this 48-hour tax holiday, China is believed to have purchased around 40 cargoes of Argentine soybeans. Total volume at roughly 2.6 million metric tons continues to cut into potential U.S. demand. While much of this volume is for November or December shipment, some of these sales do represent shipment next spring in April after the new crop harvest down in Argentina. Farmers there also rushed to take advantage of the higher prices by selling several million metric tons of corn and grain commodities as well. The U.S. Treasury announced that they were working on a $20 billion aid package for Argentina to help them stabilize their struggling economy, which prompted the American Soybean Association to issue a statement calling on the Trump administration to prioritize securing an immediate trade deal with China, while going on to say the U.S. farmers can no longer wait and hope. Retaliatory tariffs by China have allowed Brazil and Argentine farmers to capture markets at the direct expense of U.S. farmers, they went on to add. The farm economy is suffering while our competitors supplant the United States in the biggest soybean import market in the world. USDA Secretary Rollins later stated that her department was working with the Trump administration to provide additional financial aid to the American farmer, with an official announcement perhaps in a couple of weeks. Export sales later this morning. Yesterday's EIA report showed ethanol production last week at only 301 million gallons. That was a 17-week low. However, still up 3% year over year. Expectations for next Tuesday's quarterly stocks and small grain production report are out. Both Reuters and Bloomberg surveys show analysts are expecting slightly higher corn stocks while slightly lower soybean stocks as compared to the September WASDE data. Also, very little change in U.S. wheat production is expected, down only a couple million bushels from that August estimate of 1.927 billion. My forecast at 1.905 billion is amongst the lowest in the range of guesses. U.S. weather shows nearly complete dryness across the nation's midsection over the next 7 days, with temperatures above to well above normal, favorable for both corn and soybean harvest, along with winter wheat plantings. D's corn up 3 cents here, almost matched yesterday's range here in the overnight session. Support below the market rests at 4.14 3/4. That's a 50-day moving average, with near-term resistance at 4.31 1/4. Inside trade for Novi beans overnight, resistance above the market rests at the moving averages at 10.26 and also at 10.30. Seem to be building some support below the market just above that $10 level. Inside trade for October oil and spot meal did fall to a fresh 2-month low. Wheat continues to build on its recent strength. 50-day moving average resistance for December Chicago, that comes in at 5.33 1/4, 5.25 1/2 for D's KC. Big range overnight for D's Minneapolis futures, briefly trading up to a 3-week high before settling back a touch. Thanks for listening, everyone. I hope you have a great day.